I want to give you guys an update on what's going on in the housing market. And quite frankly, I'm a little bit concerned about what I'm seeing out there. And I want to just share this with you guys so that you can see my point of view on what's happening in this spring housing market. I'm seeing that home sales are really pretty much just collapsing in this spring market. We're seeing purchase contracts falling apart at rates that we haven't really seen in many years. Now, traditionally, we all know that the spring housing market is when really this whole thing heats up. We have families moving. They're looking to make a move before the next school year. We have inventory going up, and competition between buyers normally drives prices a little bit higher as well. Now, it's also when most apartment leases end in the United States. So you have a huge amount of renters that don't want to, extend their leases. They don't want to renew their leases, but rather they want to go and buy a home. But this year, we're not really seeing a lot of that. Now, according to the National Association of Realtors, existing home sales dropped by 5.9% just in March alone. This data kind of just tells us that, the market is not slowing down. It's really just stalled, because as we dig in a little bit more into the data, it's really concerning because pending sales are down. There are more listings out there. There are a ton of new listings, but buyers are just not biting. So activity has cooled dramatically. Not to mention that, home builders are also a little bit sour about this market. They're sour about the economy overall. And we can see that with housing starts that pretty much tumbled to an 8-month low in March, according to the data. Now, let's talk a little bit about what we're actually seeing out there, and I want to bring you guys up to speed. The first thing that we're seeing about buyers, they're just pretty much pulling back in a big way. A recent report by Redfin shows that more Americans are backing out of major purchases, and homes are one of those things that they're ditching. Over 24% of Americans are scrapping plans to make a major purchase, like buying a home or buying a car, due to the tariffs. Now, this report should be pretty alarming to home sellers, because as we read a few more of the bullet points on the article, it says that nearly 1 in 4 U.S. residents are canceling plans to make a major purchase, such as buying a home or a car, because of President Trump's tariff policies. Over 55% of respondents are less likely to make a major purchase this year, 39% who are much less likely. Now, more than a third of people do not even have an emergency fund to cover mortgage payments or rent payment in the event of a personal financial crisis, like losing their jobs. And now it sounds a little bit crazy to think that, most people don't even have $1,000 to cover a financial crisis. But I do remember seeing a lot of studies last year that, there was not a lot of people that had at least $1,000 in savings. And this report from 2024 showed that only 1 in 4 Americans have less than $1,000 in their savings account. While this report from CBS News found that most Americans can afford to cover a $1,000 emergency expense. And which is even crazier to think, because unemployment levels have been at record lows for the past 4 years, or at least that's what the data said. Well, how in the world would a lot of people be able to come up with money for a down payment right now? Because, let's be honest, the average price of a home is almost $420,000. So, they will need around $14,000 for a down payment alone, and that's not even counting the cost of buying the home. Now, the second thing is that home sale cancellations are surging, and Newsweek just reported that over 53,000 home purchase agreements fell through in March alone. That's nearly 15% of all pending home sales nationally. And that's the third highest March level since records began in 2017. And the highest, if you can guess, it was back in 2020 when the pandemic started. Obviously, people were fearing that they were going to lose their jobs. We're going to go into a major recession. So they just pretty much scrapped plans for buying a home, even if they were under contract, so they cancel. So for most people, selling a home, having your contract canceled, terminated, or the buyer financing falling through can be really catastrophic. I mean, look, imagine moving your family into another home, and if you still have a mortgage on the home that you're leaving that you can't sell, or it's taking too long to sell, now you're gonna have 2 mortgage payments to pay, and that can be a pretty big burden. In my personal experience, being a mortgage broker, most buyers don't just end up buying a home, or they just cancel a contract because they fear the economy, but it's actually because their loan got denied by their lender. In fact, in the last year, the rejection rate for mortgages rose to a decade high, as over 22% of all mortgage applications ended up being denied. And with all this going on, we're seeing that more and more sellers are getting desperate, and this is something that you guys need to think about if you're thinking about selling a home. According to Redfin, a record number of sellers are now offering concessions, so things like paying for the buyer's closing cost or offering interest rate buy downs so cutting the prices before hitting the open market. In fact, some sellers are giving out concessions and getting less money than they hope for their homes. Like take, for example, this Redfin real estate agent that says that he had a client who covered 7 months of HOA fees for the buyer. Now, meanwhile, builders are offering concessions because it's in their best interest to keep sale prices high. They're willing to pay for buyers' closing costs, maybe provide, washer, dryers, appliances, which is not common when you buy a new construction home. Now, I want you guys to take a look at the top 5 markets where sellers are providing concessions to lure buyers, with Seattle leading the chart at 71.3% of all homes. Meanwhile, Portland, San Diego, and Atlanta at over 60% respectively. So with this said, home sellers are obviously willing to negotiate. So why are buyers staying on the sidelines? If right now is probably the best time to negotiate the price of a home in probably the last 4 to 5 years. It kind of boils down to a few key factors. The first one just continues to be interest rate, and in part of it, obviously, home affordability. Let's be honest here, guys. Interest rates are still too high. We had a little teaser of lower interest rate in April for probably a grand total of like 5 days, and then interest rates just skyrocketed one more time after the tariff agreements talks broke down between the U.S. and China, with interest rates still hovering around high sixes in some cases. It's just basically a huge psychological and financial barrier for home buyers to take. And if you guys think about it, if you have bought a home for, say, $400,000 today with a 7% interest rate, your monthly payment will probably be just about $800 to $1,000 higher compared to if interest rates were around 4% or so. And even though President Trump is openly pressuring the Federal Reserve to lower interest rates, Jerome Powell has said that Trump's comments are not going to affect the interest rate decisions by the Fed. It's actually expected that the Fed will continue to hold rates for now at this May 7th meeting, so just this week, just to kind of see what the effects of tariffs are going to be. So we're really not expecting any big mortgage rate movements to the downside this month. There might be a possibility that the Fed will cut rates at the June meeting, but that's just, yet to be determined. Now, in addition to high interest rates, Americans are still struggling with high inflation and the fear around tariffs driving up the prices even more. According to a study by Redfin, nearly 1 in 4 Americans are canceling plans to make a major purchase, such as buying a home, because of the tariffs policies. In fact, consumer confidence is at a multi-year low thanks to the uncertainty around the economy. In April, the consumer confidence index sunk to the lowest level since May of 2020. And finally, too many buyers feel that they are overpaying for a home that they are going to struggle to qualify for. In many markets, the economies of scale of home buying are just simply broken. And I want you guys to take a look at this chart right here, which compares the median income versus the median home price in the country. And you can clearly see how even though the median income has risen since 2000, the spread between both has increased sharply, with the median home price outraising wages by a lot. According to the Census Bureau, on an inflation-adjusted basis, households' incomes increased by just 8.5% since 2000, while home prices increased by a crazy 56%. So, all right, what does this all tell you? What does it actually mean if you're looking to buy or sell a home in 2025? If you are a buyer, really, you have more negotiating power than we've seen in years. If you're not asking for seller concessions, price reductions, or both, you really need to. Or maybe you made an offer to a seller, they're not willing to give you anything, then in my opinion, you just gotta move on, because there is a lot of inventory out there. We're seeing the same thing for new construction. Every day, I'm getting bombarded by emails from builders with incentives for buyers. And remember, builders are very incentivized to move this inventory, especially when the economy is looking to slow down. Also, I feel like you guys gotta take a look into short-term fixed interest rates, otherwise known as adjustable rate mortgages, if you're putting a large down payment, or maybe you're looking to get into an FHA loan, because right now you can get an FHA 5/1 ARM at roughly 5.5%, 5.75%, where average interest rates for a 30-year fixed FHA loan is at around 6.5%. So this is a huge difference, especially if you are in a high cost of living market. Now, if you're looking to sell a home, you have to price realistically from the start because wishful thinking pricing, like tacking on 10-15% over your next door neighbor's last sale last year, is going to get you ignored, and you're going to have to drop your price aggressively. I want you to take a look at this house I found in Atlanta, Georgia. This house was initially listed at $650,000 on March 2025. The sellers have dropped the price by 20%. Now the house has been sitting on the market for 60 days. Everybody is seeing, buyers are seeing that they are dropping the price drastically, rapidly. You know, at this point, buyers might be wary that there's something going on with this house. So it's just not a really good situation if you are having to drop the price on your home that much, that quickly. And then finally, be prepared to negotiate. I've shown you guys a ton of data in this video. You may have to incentivize potential buyers with closing cost credits, price adjustments, because at the end of the day, this is just not the same market of 2021, 2022. I also understand that a lot of people were celebrating the fact that there was a change in the commissions with real estate agents, that sellers don't have to pay buyers agents anymore. That might actually not help you a ton if you don't offer to pay for a buyer's commission, because you're basically going to be taking on less potential looks for your home. So I would probably suggest you to, throw in some buyer's concessions if you're not. So is this the worst spring market we've seen in recent memory? And the answer is absolutely yes. By pretty much every metric it is. But it doesn't mean that the market is dead. It doesn't mean that, the market is going to collapse. It just pretty much means that the rules have changed. And if you can adapt, whether you're buying a home, selling a home, or investing, I'm sure you can still find some pretty good opportunities out there. All right, guys, that's the end of the video. Thank you so much for watching. Let me know what you think in the comment box below, and I look forward to seeing you on the next one. I will see you soon. Bye-bye.